We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the CashFlowPro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of CashFlowPro, your daily real estate investing podcast and YouTube channel. I'm here today with Dan Handford of PassiveInvesting.com. And as you remember, a couple weeks ago, we had the self-storage part of PassiveInvesting.com that we got to peek kind of in behind the curtain of and talk to those guys and see exactly how they were doing it. Now, Dan today I picked a topic that I really think Dan fits like a glove, and that is how to become a master at real estate investing, because this guy has absolutely killed it the last 3 or 4 years. And those of us that have been watching from afar, Dan, we're really just kind of admiring everything you're doing and pulling some of these funds and really pulling the strings of getting investors from like everywhere. That's what I think is most intriguing to me is that you're just as likely to get an investor that walks by your building there in Charlotte and says, "Oh, hey, Dan, I'd like to invest with you," as you are to get one in New Jersey or Wyoming or You know what I'm saying? I mean, the network that you've built is really intriguing. So why don't you kind of start out and tell us a little bit about like what got you started? How did you get started? Because a lot of people are just kind of stuck right there. You know what I mean?
Yeah. So, I appreciate you having me on, Casey. Looking forward to sharing with the audience here and providing as much value as possible. One of the things that I used to do in my past is chiropractic. I'm actually a chiropractor by trade. Several people, a lot of people don't even know that, but went to school to be a chiropractor, started my own clinic. Grew those clinics to 4 locations and started to integrate medicine into those clinics. And even now today, my wife and I own those 4 clinics. They're 100% debt free. They cash flow very nicely. And so that creates a problem, which is called taxes when you cash flow nicely. So you kind of get that penalty of having to pay money into the government for taxes. And so, of course, it put me down a path to try to figure out how can I keep more of what I'm earning. And real estate really was that ticket. And so back in 2018, I decided to step away full time from the management of my clinics, promoted my COO at the time to the CEO. He's still the current acting CEO in place right now and has done a great job maintaining those clinics for us. I won't say it's been an easy kind of transition, but it's been a good transition, right? Because it's allowed me to focus on the real estate side of things and grow our real estate portfolio from really nothing, because I had no experience in real estate other than leasing a few buildings or buying my primary residence, but I did not actually do any type of real estate investing prior to founding and getting started with PassiveInvesting.com. And what we decided to do is, first off, read a lot of books, do a lot of research, listen to a lot of podcasts, really kind of absorb the information. I did that for probably about 1.5 years before I really stepped out and did anything full time. But in February of 2018 is when I stepped away full time to be able to really focus on the real estate side of things and started to do some of my own passive LP investments. My wife and I have a portfolio right now of just over 70 LP positions with about 17 different operators. So we've been building that up over time and did that in the very beginning. And that also led us into the mentor that we hired. So we hired on a mentor, and we wanted to make sure we hired somebody that was already doing what we wanted to do and was already where we wanted to be. And so we strategically hired this person to be able to help us reduce the learning curve, learn the ropes, and then be able to build out the platform that we have today that allows us to be able to raise capital. And, in the very beginning, it was very challenging to raise capital, right? In 2018, we ended up raising just over $4 million that first year, those first 12 months or so. I guess 10 months since I started, kind of in that February timeframe, if you will. But really, that first year, we raised right around that $4 million worth. And then in 2019, we ended up raising $32 million. In
Wow.
2020, we ended up doubling that, or almost doubling that. We were at 61 million in
Okay.
2020. That's in the middle of the pandemic. And then in
Yep.
2021, ended up raising just last year a little over 196 million. And this year, right now, we're right at the end of August of 2022, and we've raised just over 225 million already this year. And so we're on
Wow.
track to, of course, surpass. And I don't think we'll get to the point of doubling the number from last year, but definitely
Sure.
surpassing that number and growing from year over year, and continuing to see that consistency. And to date, we've acquired just over about 1.3, 1.4 billion in assets.
Wow. Now, I hope the listeners see why I selected how to become a master at real estate investing, right? Because there's so many people that get hung up, and when we're looking at, like you said, 4 million, when you're talking about $4 million raised from February 18 through the end of the year, and then you're talking about 400 million, let me appeal to that. I know it's probably not going to be 400 million, but the fact of the matter is you're probably not going to miss 400 by much. And so when you look at 100 times, basically from where you started through today, man, I mean, the scale that's involved there is just really mind boggling. And that's like, I think so many people try to scale before they ever raise. Like, for instance, your first 4 million, basically a drop in the bucket.
Mm-hmm.
But I think a lot of people start focusing on, okay, what am I going to do when I can raise 400 million? Well, instead of worrying about that, why don't you worry about raising the first $4, then 400, then 4,000, then so on and so on. So what challenges were there between February 1st of that year and the end of the year? What challenges arose for raising just even the first 4 million?
Yeah. So I would say the first one is trying to find our first deal, right? Because you can't raise money unless you have a deal. And
That's
so
right.
that was probably the biggest challenge, is trying to find the deal. And of course, the second challenge is trying to find the money, right?
Yep.
Trying to find the investors that are willing to trust you to put money into a project. And, obviously when we were in the very beginning stages, we didn't really have a track record, right? As far as real estate was concerned, we had a business track record and success in that. And so we know that translation from business success into real estate, definitely is at play there. But a lot of investors were like, I'm going to sit on the sidelines. I'm going to watch you because this is your very first project that you're putting together, right? And so what we did before we put our very first project together is, like I said, I hired a mentor, learned a lot of the steps in the ropes. And then we started to do some LP or passive investing ourselves first. And then we actually started in our first two projects, we co-GP'd or partnered with another operator to be able to build our track record, build our credibility, not only with investors, but also with the local brokers and the sellers, to be able to build confidence in our group that we can actually perform on what they say, well, what we are telling them that we could do. Because our very first project that we put together ourselves was a 130 unit asset out of Greenville, South Carolina, $8.9 million acquisition. And we ended up raising about $2.5 million for that one project. And for us, it was a big project because that was the very first deal we had done. $2.5 million was a big check for us to be able to commit to. And we had never raised that amount before. The most we had ever raised was about $500,000 for one of our projects that we had done with one of our partners. And so to be able to kind of build that track record and credibility, was worth it to us to partner with those groups, and then to be able to do it on our own and have that confidence going into that project that we could actually perform on it.
Now, I want to go back, and I want you to kind of define this partnership with those groups, because what I think you're giving here is really the almost a microscopic view of the beginning steps that I think a lot of people need to take in order to get even started, right? So why don't you dissect that first co-GP part for us, and then how that developed, and then was it ultimately at the end of the day profitable for you all? Now, obviously, was it break even, or was it, hey, we can go into this, we can raise this money, we can make a little bit of money, but we can also make a lot of experience? What was, some of that kind of stuff?
Really, for us, we really didn't even care if we made money on that partnership.
Yeah.
But from the partnership perspective, it was a group that we had a prior existing relationship with. We already knew them. We had invested with them passively before. And so we kind of, and ourselves personally, already knew them. So, to me, I don't ever want to just go and I don't want to just go and partner with somebody just because I want to make money, right? I want to make sure that I know them, I trust them, I know what their level of communication is and their processes. Because if I'm going to bring on my investors to invest with them, I want to make sure that I have that same level of confidence in that other group. And so in the beginning, like I said, we didn't have any deals that we'd ever put it together. And so to build that track record and experience and gain the exposure necessary, we were able to partner with those groups, and we did make some money because, we get a share of the acquisition fee and share of the asset management fees. And then with that asset has now already sold and gone full cycle. And so we were able to still capitalize on that from the percentage of the GP that we were able to get from that partnership. And so it was definitely a profitable partnership, but the monetary profit was not anything near what the indirect, profit that was from it, that allowed us to be able to have that extra credibility and track record to be able to acquire more deals.
Sure. That educational profit was, I'm sure, high margin stuff. You know what I mean? I mean, especially when you start looking at, if you can get in and start looking at some of the underwriting standards that some of these guys had in place, and then where you might be able to add value. And I know when we're looking at deals and doing stuff like that, the value add component is such a wild, such a variable among different groups, and everybody looks at it a little differently. Some people look at it as, we're going to add laundry rooms and other type stuff. Some people look at it as we're going to increase rent. So, now, when you first got that, like, go back to your first deal, like the first time you ever called somebody and said, hey, do you want to invest? Now, you had already invested passively, so I'm assuming you had kind of seen behind the curtains of how these people approached you, how they asked you for money, and what worked and what didn't work. But when you first started asking people for money, what was, like, I've heard it go two different. I've heard people come at it from like a pitch standpoint, but I've also heard people come at it from like, hey, this is an opportunity. If you want to make a return, here's, we have this opportunity for you. If you don't, we'll move on to the next person that does want an opportunity. And I've heard it kind of both ways, and maybe a mix of the two. But how did you approach your first investor?
Yeah. Well, it's funny because, you hear a lot of people saying, hey, I was able to get my mom or my dad or my aunt or my uncle or somebody like that, could invest with you, right? So you kind of use this kind of family and friends connections. And I will say that up to this point, I haven't really had any family members invest with me. Not because they don't trust me or they don't want to invest with me, is they really don't have the money to invest with me, right? And so to me, I went straight to people who knew me, but also didn't really know me in real estate, right? So I'd call them up and say, hey, I got this project, that I'm putting together. And of course, the first thing they'd say is, I thought you were a chiropractor. I didn't know that you were doing real estate,
Yeah.
And so being able to leverage that other group that I was partnering with and saying, hey, I actually have just now going into the real estate space. We've started this company, passiveinvesting.com. We have partnered with this group over here who has this X, Y, and Z track record that is phenomenal. And we're leveraging their experience and credibility to be able to learn a lot of these things on our own so that we can do it on our own. But in the meantime, I want to bring you this opportunity that we are partnering on so that, you can be a part of it. And a lot of the investors that we had talked to, I had already kind of talked to and primed them that we were looking for this type of an opportunity. And so I will say that, Casey, I've never just like sat down and had to pick up the phone and I dial for dollars, if you will, if you want to call it that way.
Sure.
Different type of dialing for dollars. But most of my conversations have been initial conversations with investors. and then making sure that we stay in communication with them so that they are aware of what's going on. So we put them on our physical newsletter list that we mail out to them every month. We put them on our email list so that they're apprised of all of the things that are happening with passiveinvesting.com. And that way, when we have a future opportunity, they're already there. They're already educated. They've been hearing from us all along. And so it's no surprise or shock to them. And we send it out there, and we get interest, and we get to fill it up. Now, that very first deal, it wasn't as easy as just sending out an email and filling up the deal, right? It did take some strategic phone calls and things like that, but the phone calls were to people who had pretty much already said that they were interested in investing in that particular deal. I'll give you an example. Every project that we've ever put together, we typically do some sort of email blast out there, and there's a way for them to download the investor offering memorandum or to join us for a webinar or something like that. Well, the software that we use to send out the emails lets us know every time somebody clicks on the link to download the investor OM. And so we can create a list of people that we can follow up with that say that they basically are saying, I'm interested in this deal. I've clicked on the investment summary to be able to find out more information. And if they don't reach out to us, then we can reach out to them and say, hey, we saw that you were interested. You downloaded the investor OM. Just wanted to call you, Casey, and see what kind of questions you may have about this opportunity and be able to open a dialogue with them, right? And so that's really kind of what we did, even from the very beginning, and even what we do right now.
Yeah. And I'll tell you that your whole approach, and I remember when we were at MF InCon back, I can't remember, was it
June of 2020?
Yeah.
2022.
So, and that this recording this as of the end of August. So it's been a few months ago now. And
Casey's just getting old, which is why he couldn't remember the dates. No.
That's right. That's right, man. I tell you. And then with time you pile all the kids on top of old age and trying to remember whether it's baseball day, basketball day, volleyball day, or what day it is, So, but one thing that really stuck out to me is your all's focus to detail. And I'll tell you, I heard you talking about your offering memorandums, and I don't remember the exact context of the discussion, or maybe it was even just a discussion I overheard. I can't recall. But you were talking about like these people physically having these high gloss pictures to flip through a manual or to flip through an offering memorandum and actually see what they're going to be investing in. And now, am I correct in that that's what you all do, right?
Yeah. So actually, for those of you who are watching on video, I'm going to turn around real quick and get this for you. So this is actually the, you remember seeing Shaq on stage at the MFI InCon in Charlotte this year. Well, this is actually the OM. This is actually Shaq's tag. And I don't know if you can see it, but
there you go.
He did sign it. He put his little signature on there. And then he also signed this offering memorandum here too, because this is the one that he's investing with.
Did we get his signature on an investing contract though?
That's right.
On
and then,
PPM.
And then this right here, of course, is the kind of physical printed copy of this, investor OM that gets sent out, right?
Yeah.
Obviously, this is not one I'm going to send out because it's got Shaq's signature on it, and that'd be kind of cool. But it's actually sitting on my shelf because I don't really know where to put it and what to do with it. So until I figure that out, it's going to sit there and sit there. But this is actually on one of our properties we did earlier this year called Mariner Grove, located out of Savannah, Georgia. It's about a $96 million property and raised right around $35 million or so for this particular acquisition. But this particular one is just, it gives you that example of the physical side of what we do, and we print this off, mail it to the investors on these particular assets.
And that's what sticks out to me. And that's where I want to take this discussion, because I think, like I said in the beginning, so many people are so worried about what they're going to do when they have 40, 50, 60, 70, $80 million under management that they forget they have to raise $1 before they can ever get there. Yeah. Right. So they're worried. So they're thinking about scaling, and I'm guilty of it myself, thinking about scaling and thinking about the ultimate plan rather than, hey, I need to work on this today. I need to work on getting my first $50,000 investment first. And the reason why I say that is because I think a lot of people forget how important the physicality of this stuff is. Like, somebody has that book, they physically have invested with you, they physically have this book, they physically can take that book out to their friends and say, look what I just invested in. And what do you think their friends are going to do? And I know you figured this out, but I'm more talking to the listeners.
Yeah.
Like, and I think that this constant approach of saying, of being a level above than the other guys in this business is really what's led to this. And obviously the timing of the economy and a lot of things led to being able to scale so quickly. But I just think a lot of people forget that a deal to you or a deal to us as principals or whatever versus a deal to somebody investing, like, these people want to talk about it with their friends. They want to show people, they want to tell people, they want to talk to it. And I love that, the physical stuff that you all give out.
Yeah, it's a conversation piece for sure for when people come visit them, and people bring it to work and kind of show it off as almost like a trophy piece of, hey, look what I invested in, or look what I own a piece of. And we even have investors that'll sometimes miss these, and they'll invest and they'll say, hey, would you send me an extra copy because I want to add it to my list of books that I have of investments. And so it's definitely a component that I've seen one other operator try to do it, and they did an okay job with it, but then they didn't do it anymore. They only did it with like one deal. But we do it with every single one of our assets.
I've got to ask. My eyes tell me that you're talking about a $4 or $5 book there each. I mean, I could be wrong. And I'm thinking some of these people might say, hey, if I've got 100 investors, I mean, there's 5, I guess people just look at things like if there's that little margin in what you're doing to be able to do that, then I just don't think people want to grow. It's almost
the unique thing about these types of printed materials like this is a deal called Mariner Grove, right? And this is an offering. And so it's printing these off as an offering expense. And so passiveinvesting.com doesn't have to pay for the printing on this. It's included in the documents that says that we're going to take some of the funds that we raised for this project to pay for marketing expenses. And part of that marketing expense is the printing of these to be able to raise the funds to close the project. So it makes sense for the offering to pay for that. But sure. At the same time, it's not really an extra expense for us. It's the offering itself that's actually paying for those expenses. And I mean, even to print up, 1,000 of those and have them sent off, might cost us, I don't know, probably $15,000, $20,000 to send them off or whatever it is, because we do them in bulk like that. But it's worth it to us to get that into their hands, to be able to be aware of the offering and to be able to raise the funds for it.
Well, and I think that I think that the value in those is not even getting those to the people that invested with you. That's like a fringe benefit, if you will. I think the value in those is the showing off to the friends, to their friends.
Yeah, no, absolutely. And we also have a physical printed newsletter. I don't have one handy right now, but we have a physical printed newsletter that every month, whether we have an offering or not, it gets mailed out to those investors. And one of the things that we do in there is we actually, about twice a year, we'll print up a second copy of that newsletter, and we'll shrink wrap it, and we'll put on a sticker on the outside of it that says, we printed an extra copy for you to hand off to a family, friend, or colleague. And now we've already taken the extra lengths of printing it out and sending it to them. And now it's sitting there. And so now they have an opportunity to be able to take that and hand it off to somebody else that is, like them, that is an accredited investor and has funds that they want to invest. Yeah, there you go.
I just looked over and they're sitting there. There you go. Yep. There it is. I mean, I've got one of my own right there. Mine doesn't have Shaq's signature on it, but
I'll sell you mine. I'm thinking I'll sell it for about maybe $10 million. No.
Oh, I think easy. I think, and
if it's worth that, somebody better buy, because I don't want to sit on $10 million like that. That's just stupid.
That's right. I'd have to turn it into the cash myself. And I think we all got several valuable lessons from him that day. I mean, just so much. I don't think anybody got a more valuable lesson than my son. Which I will always be forever grateful for that, for you all bringing him in, and then
who's your son's team again? Wasn't it St. Louis?
Yeah, St. Louis Cardinals.
Yeah, man. I'm so sad that the Braves got beat by them 2 out of 3 on that series. I was watching that. I was thinking about that conversation that Shaq had with your son. So.
Yep. He called him up there and said, "Come up here and sit down with me and let's talk." Yeah. So that was definitely something to remember. Then Barbara Corcoran, and so it was definitely. I encourage all the listeners next year when when they put on MFNCon, that you make your way there. It's one of those deals where if you have the last $2,000 to your name and you're trying to get started in this business, use it to get there, because not only will you meet people, you will see people, and the thing is that these celebrities, they all have a valuable lesson, and I think they all have. We as entrepreneurs have a common thread with them, right? I mean, no matter how famous and no matter how high up, no matter how wealthy Shaq is, we have a common thread with him, and that was his joint venture mentality of saying, "Hey, I can leverage and use. We can take my money and your time, combine them, and we can both fly high." And so, and that was really a key takeaway from what he said. And again, yeah, that was really neat. So,
real quick, Casey, while we were kind of mentioning the MFIN Con, for those of you who are listening, you can go find out more information about the event coming up next year. You can just go to mfincon.com. And we do have Alex Rodriguez already scheduled and confirmed for next year, which is really exciting.
Oh man!
And literally, as we're on this as we're on this podcast recording, I just got a message of the second speaker that has been confirmed. And it's a really exciting speaker. I'll tell you who it is. This is you guys are going to be the first people to know about this. But have you ever read the book Influence: The Art of Persuasion by Robert Cialdini?
Yes.
So it is one of my all-time favorite business books, and he just confirmed that he will be coming and speaking at the event, which is really exciting. So
wow,
I'm excited to have him there and be able to rub shoulders with him.
Yes, absolutely. That's going to be really neat. And I'll tell you, man, all these people, like the mindset stuff that you all put forward at MFINCon is like, what was his name?
Jocko
Willett.
Yeah.
Willett, right?
Yeah. Willink.
Yeah. And he, man, like he didn't talk a single thing about real estate, nothing. But he talked all mindset. And when we were sitting there and you're just listening, you're like, listen, when it gets tough, when it gets hard, you know what? Keep going, keep pushing, keep getting there. And the whole mindset of not getting drugged down in the gutter. And, it kind of goes back a little bit to you all sending these books out right here, because people with money, you know what they do? They hang out with other people with money.
That's right.
Right. If you've got money, you don't have friends that go out and party and go to getting bar brawl fights every Friday night. Right. You hang out, you might have a drink, but you have it with other people that have money. And so what I'm getting at is that whole mindset thing of saying, hey, this is who I want to be, so these are the people I'm going to hang out with. I mean, that's a really cool element I think you all bring to basically everything you do, really.
I appreciate that.
I think there's a lot of value in that, because we all tend to find the common thread again with people that we want to be like. So when you start doing that, you just kind of tug yourself up, you know what I mean? So now we got to kind of shift away from all the fun talk and talk a little business, because I know you all have a lot of big things going on right now. Now, has passiveinvesting.com, have you all pretty much shifted the whole thing to a fund model? Like everything is a fund model now, or do you all still do one-off syndication deals? I know if you have some big $30-40 million raises like that, I mean, I got to think that possibly that could be a one-off raise, but I guess I'm just curious.
Yeah. So, we have definitely, done a lot of research ad nauseum when it comes to the funds, whether doing it, raising money via a fund or a single asset raises. Up to this point for multifamily, we've done single asset raises.
Okay.
there's a couple of reasons why, but one of the things that we're doing right now is for some of our assets like self-storage and express car washes that we are acquiring is we're doing what we call kind of mini funds. And so instead of being kind of a blind fund where you don't really know where the assets are going to be located because they don't know which one they're going to buy yet, they're going to basically just raise money into a fund and hopefully they'll find something and place it fast enough to be able to make enough money. We actually do it differently. So we actually go and find the assets and secure them, to get them under contract. And so, for self-storage and for self-storage and with express car washes, the asset values are lower. So they're usually 5 to 10, maybe 15 million a piece. So you don't get to have a $100 million property with, express car wash where you're raising 30 or 40 million. They just don't exist. Right. And so for us, what we decided to do is take 3 or 4 or 5, or we even had 7 assets in one portfolio. And we already know those locations. We go ahead and add them into the fund. And so the investors know exactly which assets they're investing in, and they'll be diversified and invest across multiple assets. But there's a specific amount of money that we're raising for that fund. So I'll give you a quick example. Where we just acquired about 2 months ago a 7-unit express car wash portfolio, and we raised money to acquire all 7 locations in one fund, right? And so we were able to raise that money fairly quickly, right at about 20 million to be able to acquire that portfolio on the equity side. And then just recently, we just launched our 4th mini fund, if you will, for express car washes, raising right around like 12 million, 12.5 million for that fund, filled it up within 24 hours. Right. And so being able to raise money like that on those kind of our sweet spot, I would say, is around kind of the, $15 to $25 million range is kind of our sweet spot as far as money raised. So
sure.
We have a very high repeat investor rate, which allows us to have a good.
That was my next question.
Yeah. Well,
that was my next question. How many of these people, because it seems to me like if you have somebody, you can bring them into a single asset deal and you take that deal full cycle, not only are they getting their $100, $200, $250,000 back, but then then they seem to have a trust with you, because the hardest thing about a fund is the trust piece. Mm-hmm. People are like, especially if you're starting out, you don't have a lot of track record or whatever. People are like, like you said, are you really going to find the assets that are going to make the money? And then am I really going to get my money back?
Yeah.
But it seems to me like once you have them in that cycle deal, you could almost shift them and say, hey, now we have a fund here that's express car wash. You say express car washes. Is that like where it's like one thing, you don't have bays and all that stuff, you just cars go through? And
so there's usually going into the driving up to the pay station, paying for your car wash, whether it be with a monthly membership or with a single wash payment or whatever. You stay in your car, they guide you onto the track, you go into the tunnel, put your car in neutral or whatever, it pulls you through, cleans the car, dries it. On the other end, there's free vacuums on the other side.
Hi, this is Casey Brown, host of the CashFlowPro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making CashFlowPro part of your day. Now, back to the show.
Awesome, man. That's great. And I'm assuming because I know they're building a couple. They're building one here in our little town right now, an express car wash. As a matter of fact, the real estate's for sale, and whatever company is going to that is building it is now going to rent it back from you after you at a specific cap rate. Mm-hmm. And so anyway. But when we're so you've got single asset, one, like what we call one-off syndications, where you go raise X amount of dollars for this 123 Main Street, 200 units. Then you have repeat investors that just kind of keep churning. And as long as, I guess, you're providing a return and everything is gone as expected, that this doesn't seem like it's going to change. I mean, I guess every once in a while you might have some investors that decide they want to do something else, or maybe they want to take their capital money and go somewhere else or do something different with it. But man, that's awesome. And it's just like a rinse and repeat, isn't it?
It is. And it's one of those things that investors are investing with us because they kind of are buying into the overall business plan. And the nice thing about the express car washes is that they cash flow very nicely. And so we're able to provide higher preferred returns than we can with some of the other asset classes.
Sure.
We typically offer a 10% preferred return and then a waterfall kind of equity split after that. And it's our goal with the express car washes is to get to between about 150 to 200 locations, and then have either a large private equity roll up and have a large kind of equity multiple with that because they can sell the whole portfolio at once, or because their revenues at that point in time will be over $100 million a year, we'll potentially be able to do an IPO and go public ourselves.
Yeah.
So there's a lot of different exit options for it that can provide some really good returns for investors.
Yeah, man, you start talking IPO stuff, man, makes the hair on back of my neck stand up. That's like the steps up, and I mean, and you just keep pushing until you get there. So, well, listen, I mean, the stuff that you've told today, just in this little bit of time, I know is bringing a lot of value to people that are just kind of looking, because I think there's a lot of people that can look through multiple different lenses from this discussion. They can look at it from the beginning standpoint where, hey, you had to go out and raise your first, call it $50,000 or $100,000, all the way to, hey, now look, here we are 4 or 5 years later, raising 100 times what we did in our first year alone. And so I think that there's an array there. Now, as far as like deal finding, I know that you all, like, for instance, your self-storage arm is kind of, I don't want to say it operates separately or anything, but I just mean it's kind of like its own deal. Like you have your own manager of that side. Do you have the same thing for car washes? And then what are you doing for deal flow on multifamily? Because I know it's kind of like a bottleneck right now.
Yeah. So the answer to the question is yes. And so one of the things that I learned in scaling the medical clinics that I have is that when I went from one location to 2 locations, I took my eye off of the first location. I even transplanted the entire corporate team from the one location and put them into the second location. And it was a big mistake that I made because the first location started to suffer because nobody was watching over it. And so when we started to scale from just multifamily to be added on self-storage and then hotels and express car washes, we wanted to make sure that we didn't take our eye off of each one of those as we continue to grow and scale. And so we don't take our multifamily acquisitions team and say, okay, guys, now you're going to start acquiring self-storage and now you're going to start acquiring, express car washes, because we didn't want them to change their focus off of what they were supposed to be doing. And so as we continue to grow and we add on an additional asset class, we build out a team just for that one asset class to make sure that we have enough oversight from an acquisitions perspective, but also from an asset management perspective to make sure that investment is going well as well.
Sure. Yeah. And that's so crucial. I think a lot of people, and I think people don't put enough emphasis on the team. And you also at the very beginning mentioned mentor, mentor, team. And by the time you bring everything together, it's just like, man, this is what you got. I know we're over on our time here, but there's one little last piece here that I feel like I have to get in, because hitting record, you and I talked about your meetup groups. I'd like for us to maybe dive just a little bit into that and some of the framework, because that to me, that network that you've created has to be feeding a lot of this frenzy, because then people come in, now all of a sudden they can get your stuff in their hand and say, oh, these are the guys that are putting this on and I'm here with them. And all of that has to be playing together. And like you said in the beginning, you don't just have one channel to gather investors. You've got multiple, but I feel like the meetups have to be a huge part of that.
Yeah. I will say that the meetups have been very crucial because it allows, there's always people that are looking to try to meet up with other people locally to be able to learn how to invest. And the meetup groups have provided that as an opportunity for us. We have 53 meetup groups across the United States and Canada, and that meet on the first Monday of every month. And of course, meetup.com is the platform that we're using, and they're out there promoting and marketing for us and getting people to hear about our particular group. And of course,
meetup.com
correct.
is.
Yep.
Okay.
Now we pay a monthly fee for each one of those locations to be able to have the rights to be able to use meetup.com. But we have co-organizers that are kind of placed in all those different locations that can continually host those meetups, if you will, that can allow us to be able to continue to have the reach in that particular market. And so that allows us to continue to build out our list and, be able to promote our weekly webinars that we do. We've been doing the weekly webinars for, several years now, where every single week we were on a webinar, usually on Tuesdays around 11 o'clock or 12 o'clock. We're doing a webinar, just teaching anything and everything about multifamily investing or self-storage or other asset classes, and kind of what we're doing and kind of really uncovering the layers of the onion, if you will.
So do you walk? So do you walk people? You bring them into a local meetup in, like, let's say, I don't even know if you have one in Cincinnati, but let's say Cincinnati, you bring a local meetup, and then you have an on-site guy there that runs the meetup that maybe puts the appetizers and stuff together, whatever the meetup consists of, and then says, okay, hey, this is how you invest, and gives like a high-level overview. Then you walk people from there, and they're like, okay, hey, if you really like tonight's discussion, we're going to have a webinar Tuesday at noon or Tuesday at 10 or whatever. Go check that out. And then that's where they get a chance to meet you yourself on this webinar, and they have materials in their hand that they can look at and hear about and discuss. And then, hey, if you're interested in investing, book a call.
Yeah, so it's not exactly like that. So basically, at these meetups, the co-organizers, we don't pay them, they don't pay us. It's really a volunteer position for them to be the local authority in their particular market, and so they get access to the list that's built up at their group. They get to speak in front of their group, but they also get direct training from me. So I send them training on a topic for that month. Every single month, so that they can learn from the different things that they're going to be teaching. Because there's people that are new to the space, but they can still run a meetup group, and I can teach them a little bit about how to find deals or how to raise capital, and how to vet property management companies, and teach them that. And we also give them out a one-sheeter so they can be able to have that information to disseminate it to their group. And if they are a new investor, then of course they'll get sent an email it's an introductory video on investing in multifamily, right? Mostly from the active perspective, right? Because with the Multifamily Investor Nation, it's really designed to teach people how to invest on the active side. But the kind of our main goal with it is to attract passive investors, right? Whether it's an active investor who's trying to do it on their own, but they have, say, maybe a 401k or IRA that they can't invest in their own deals, and they can invest with us. We actually have some really well-known syndicators that actually invest with us directly via their retirement accounts, because they can't invest in their own stuff. Yep. And so that helps us be able to bring those investors in. But there's a lot of people that go to YouTube and to the podcast world and say, they want to learn about investing, and they go, holy crap, this is a lot of work. Here's my money. You do it for me. And that's kind of what we're kind of stepping into. And, we don't have a high paid coaching program or coaching program at all. We don't do anything paid except for a couple times a year. We'll do some intensives here in Columbia, South Carolina. And then we'll also do the MFIN Con once a year now as well. But we're not trying to convince people to sign up with us and coach with us and stuff like that, because that's not what we're trying to do. We have
now, are you in Columbia? Are you in Columbia or are you in Charlotte?
Columbia, South Carolina.
Well, that's where my father-in-law lives. I thought you all were based in Charlotte. I guess Charlotte was just where the conference is. Oh,
yeah.
Dang.
Yeah. Charlotte was definitely the closest major city to us. And not too many people do a lot of these types of events on the East Coast for some reason. And these East Coast markets are just phenomenal markets to invest in. And so we just decided that, number one, it's close to us. It's about an hour and a half drive for us. That Charlotte was a great market for us to be able to, number one, acquire assets, because we do have several assets in the Charlotte market, but also to be able to host the event in.
Sure. Yeah. We drove right to see him right after we left the conference. Yeah. So awesome. Well, listen, Dan, there's a couple questions we ask every person that comes on the show, and these are just no right or wrong answers. But what is the best book that you've recently read or are currently reading?
I'll tell you that book by Robert Cialdini is still the book that I would recommend. I'm actually reading it right now. So the way I like to read is I get a copy of it on Audible, and then I get either a physical copy or a Kindle version of the book, and I listen to it on 3x speed while I'm reading it as well. And I love
talk
reading
about
that.
a way to train your brain.
I started it off at 1.5x, then went to 2, 2.5, and then 3. But you can definitely get through some books that way. And that book by Robert Cialdini called Influence is definitely a book I would highly recommend. And get a copy of it on Amazon, and then bring it with you at the MFIN Con, and hopefully you can get a signature on it.
Yes, that's awesome, man. That's great. All right, next question. What is a dream vacation that you've taken or hope to take?
Oh, man, dream vacation. So I'll tell you one that's on my bucket list that I have not done yet, is Hawaii. So even though I have the ability to go to Hawaii, I have not gone to Hawaii yet because I want to go there with my wife, obviously, and our kids have been young, and we still have some young kids. We have an 11, a 10, a 6, and a 4-year-old. And so once the 4-year-old gets a little bit older, we'll probably take the whole family out there and enjoy some time out there in Hawaii.
Shoot, yeah, man. I thought I had a lot of kids. If you still got that many at home, that's great. So, all right. Well, listen, I know that the listeners know how to reach out to you on passiveinvesting.com. But is there any other means of communication or channels of communication that you would like to give out right now? So if they want to meet up and talk, not meet up, but if they need to talk to you or want to reach out and get some education or something, what's the best way for them to do that?
Yeah. So I'll give you 2 different resources. Number one, I'm pretty active on LinkedIn. So you can go to linkwithdan.com. If you just type that into your browser, it'll bring you straight to my LinkedIn profile, and you can connect with me there on LinkedIn. You can also follow us more. And if you want to join us on some of the webinars that we're doing on a weekly basis, you can go to multifamilyinvestornation.com and sign up for some of those weekly webinars.
Awesome. Dan, thank you so much for everything that you've given us today. We can't thank you enough. I mean, the nuggets and the kind of behind the curtain of passiveinvesting.com view that we've gotten today has been really, really good. And I think it gives people, I think if nothing else, it gives a lot of hope, because, that's a lot of times when you're getting started and you're just trudging through what seems like the thickest mud in the world to get to the end. And then the end is just the beginning. I think it gives people a lot of hope to at least get there and say, hey man, if this guy did it, there's no reason I can't do it. Just get up and just don't quit. And again, it goes all the way back to the culture that you've built there of determination and mindset. And I really think that whether you know it or not, that's a culture I think that you all bring to a lot of different things is determination and mindset. So got to have a lot of respect for that. So anyway, thank you so much.
Glad to be here. I appreciate it. And if you guys have any questions for me, feel free to reach out. Glad to help out any way I can, and look forward to seeing you next year at the MFIN Con.
Awesome, man. And listeners, as always, please head down and leave us a review. If you like today's episode, leave us a review, type a review, and also hit that subscribe button so that you can be notified as we release new episodes and new content. And I hope everybody has a wonderful rest of the day. Thank you.
CashFlowPro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.